King James degree.
Yo, what's up, everybody? So I just wanted to hop on here and kind of discuss my trading morning and kind of what happened over, you know, the morning session. So essentially, well, let's just start with kind of what happened in here, and I'll show you all my annotations. So I hopped on the chart around like 4 o'clock, which we could see over here, like 5 or something like that. 5:30. Yeah, so I just hopped on at 5:30. And this is what we saw. Okay. That's what I saw. So price has this gap here for when you switch from the regular trading hours and electronic trading hours. So I noticed that there was a gap there. So it was, it wasn't crazy to think that price was potentially going to rally up to come and fill in the rest of that, to potentially set also the high of the week. If we're going to be bearish for the rest of the week, because DXY is bullish, right? Overall, not today. It was kind of bearish, which we'll discuss. But nonetheless, that was kind of my narrative that I was basically focused on. Let me see. Price gravitating higher to retrade to the last gap that was created on the regular trading hours on Friday, and then the news just dropped at that time as well, which sent price higher. So in all reality, you could see that this was a run on stops right here, and then it was a shift in market structure. Okay. But the fact that I was thinking that price was going to come up higher and fill in the rest of this gap from Friday, that would have been logical to find this as a setup here, okay, for a buy, which presented the YouTube model right there. Okay, and price started doing exactly what I assumed it was going to do. Also finishing a market maker buy model framework on the 1 minute. This is the 5 minute, but on the 1 minute, this was a market maker buy model framework that I had from last week, which we can look right here. Okay, so we could see that's there, and then as price was rallying higher, my thoughts were we're probably reaching up into these highs here, because there's people that were selling. You got to think like, okay, who's making money right now, or who was making money right now? We could see that sellers were making money. So what did the algorithm do? It's repricing up to not only fill in the rest of this gap here, so it's efficiently traded and doesn't have a gap, but it's also aiming for some form of buy stops to pair smart money sells with willing buyers at a higher price. And we also have the confluence of this previous week's new week opening gap from January 15th. And then we also created a new week opening gap here from Friday's close to Sunday's open price. So I marked that out as well. And you can see clearly, just as ICT teaches, it respects that. And today, just a spoiler, price went from here to there, then down to there, which was it's also set up a market maker sell model, which we're going to look at as well and discuss. But yeah, like I said, this here was a beautiful YouTube model entry. It ended up taking out sell stops. Also, there's SMT at these lows here. Okay. Which I could just point that out right now. So there was SMT at these lows. So we can go look at this here. You could see these lows here, these lows here. It's a cracking correlation. So that's smart money accumulation of buys to get price to a premium price, so smart money can sell to willing buyers at a higher price, as ICT teaches. Okay. So yeah, with that being said, let's go over to my Discord again. And as price is trading and stuff like that, I didn't end up taking this trade. I saw it. I was just tape reading to watch it. Okay. And then price, as it was just rallying up, it was further amplifying the fact that we were going to attack somewhere over here to get some of these stops. And if it would have, turned around right there, that would have been fine. I actually did take a small trade here and I aimed for this fair value gap in there, which I can show you the small execution. I didn't take any of this, but I seen it before the fact, and that's basically what I'm going to show you, because I ended up making money on this one. So then I was just like, and you could see AMP live, you could see it down there. So it's actual real executions, not bullshit. So let me see, trading executions. See, so from here to this fair value gap, it's the ends model, which is what I was gonna show. I wanted to showcase here because most people are still struggling with the YouTube model. So I'm trying to, you know, give my 2 cents and help out in any way that I possibly can as well. Okay, so I ended up seeing this, you know, as we see over here in the Discord, price ended up coming back into here to this volume imbalance that was right in here. There was also S&T at these highs, which I can also go show you guys as well. So S&T was here. You see how this high is higher than this high? This high is lower than this high. And then the same thing over here, how they're lower. This is all pre-market, okay? So this is pre-market idea. And then my entry was up in here, which it was exactly at 407 or 4007, and then I attacked all the way down here into this, the midpoint of this fair value gap. So from premium to discount, that's essentially what my idea was. And I ended up getting the ends amount, ended up getting the 5 points, secured it. It is a live account, AMP live down here. You can see that, but that doesn't matter. What matters is if you understand what I'm going to be explaining to you right now. So you see this consolidation here. So when price was rallying higher, and I'm going to throw my annotations on now. Might be a little busy, but I hope you guys can see. You can also see that this run higher here was also to just basically attack anyone that has stops up there. And if you measure this wick, you could see that the 50% level, it couldn't even reach the 50% level of that wick, which is indicative of heaviness. You know, and so yeah, so this is just like a pullback manipulation. Generally, Monday is a manipulation move within the weekly range, because there's a daily range power 3 and there's a weekly range power 3. There's also a monthly range power 3, and all the rules apply from the open, high, low, and close, and they all have accumulation, manipulation, distribution. So price was, or smart money was basically accumulating positions all the way up into this area here, which is a new week opening gap, okay, from January 15th. So you can see how price gravitated to that level, creating a Judas swing. So this was pulling traders in that were thinking it's going to buy. Retail was probably, you know, losing their mind thinking, oh yeah, we're probably gonna buy because it looks really excited, right? But us as smart money ICT traders, we see that this is an original consolidation here in a market maker sell model. And once price got up into here and created the smart money reversal, that's when it was really game time. Seeing how it was bouncing around like ping pong back and forth, and then we're left the fair value gap after shifting market structure, it returned back to the low of this previous week's new week opening gap. Okay, on January 15th. I'll leave that for you to go mark on your own chart. Just no spoon feeding, you know what I mean? Because it's not going to do shit for you. But yeah, once it shifted market structure here, I'll probably move this over here. This could technically be a shift as well. It wasn't as animated as this one, but as you can see, it came back to what? To this fair value gap and to the high of this new week opening gap to then sell off. Okay, and then it presented a move here. Then price expanded really hard to get down below this low, which is a low resistance liquidity run, because of the market maker framework that was present. This accumulation of longs got attacked by this distribution down here, and that can be classified as a low resistance liquidity run, as well as this original consolidation in the market maker sell model or buy model. Okay, a tip for you guys that ICT has said and may have went over your heads is that when you're seeing a market maker buy or sell model, the original consolidation in that framework is always a low resistance liquidity run. So if you're still trying to decipher high resistance, low resistance, this is one of those tips and facts that you can write down to kind of give you a little more clarity if you understand market maker buy and sell models. Okay. Um, and I highly recommend that any of you guys try to figure out, you know, what that is and do some studying on it, because it's a huge piece and one of ICT's very favorite models to utilize, because it's a framework for entry. It's a overall higher time frame framework for just framing a setup. It separates the marketplace into different phases, so you can understand and get your footing a lot easier than just staring at price, like just looking for the YouTube model. Um, it's just really beneficial. Okay, we could see this original consolidation. Price rallied, gave us the first accumulation here, rallied again. I mean, this could be an accumulation as well. So, if you guys are familiar with the market maker sell model and buy model, this would be a blue box. This would be a blue box. This is a red box, and then this is a red box to get down to terminus. Okay. So yeah, once price got down into here, the YouTube model was presented here. And now something that I'm going to tell you guys right here, because this run higher, once it broke down below this low, because this is a breaker, which I will actually take you guys to the 15-minute chart to see. See, high, low, higher, high, and then it smashed through. So when I seen that, I marked off the midpoint of this breaker block, and then I also marked off the open. Price ended up basically respecting all of that. Let me just stretch that out. Price ended up respecting all of that and basically refused to get back to this fair value gap that was above us in a premium. So why did this happen? Why didn't this come back? Why was it being held here? Well, the PD array matrix is something that it's very important. Okay, let me go back to my private Discord. I'll show y'all. And this was given before the fact to the private mentorship as well, or just private community. Where it is. So yeah, this PD array matrix picture here. Okay, so you see that the bearish breaker is right here, and the fair value gap is above that, and the bearish order block is above that, and etc. Right? So when there's a bearish breaker present, you're not going to be anticipating price reaching back into a fair value gap if a breaker is ahead of the fair value gap, like it is in this example here. Okay, the breaker here is before this premium fair value gap area. So because of the hierarchy in terms of the way the algorithm seeks PD arrays, that's the reason why this was held there, and it just basically ran the stops, shifted market structure, presented a variation of the YouTube model instead of coming up into this fair value gap to retrade back into there. It basically got held down by the hierarchy of price action delivery to these PD arrays. Okay, I hope that made sense, because it's a huge thing that brings clarity to you when you're seeking specific liquidity pool or specific PD arrays when you're looking to enter, and why certain things get left. Like this ended up becoming a breakaway gap because this breaker was there, and it stopped it right in its tracks to then continue down lower and attack the original consolidation that I just explained was the start or origin of this market maker sell model that started here, shifted or did a smart money reversal here at the previous week's new week opening gap on January 15th. You can also see that price literally reached right above a place where they would keep, or retail or whoever would keep their stops. It pierced it, and then right away it accelerated away from it. So that was indicative of this being an actual market maker sell model. Okay, and we also see another on the hourly chart. We see this as another consolidation that could lead to a 1 hour market maker sell model as well, potentially. But I just basically had that marked just in case, and I just basically used the previous week's new week opening gap, this new week opening gap, and then just the market maker sell framework that I saw. And hopefully this is seeming pretty basic for those of you that are familiar with, what's being taught currently, and the market maker buy and sell model understanding. I know a lot of people use it and trade that, um, because it's super valuable, and the market is literally always in some form of a market maker buy or sell model, and then it also transitions from one to the other. So, like um, for example, there was the market maker buy model that I pointed out to you guys earlier, and basically this got completed. Once that got completed, price ended up shifting and turning into a market maker sell model framework. So it went from market maker buy model to market maker sell model, reaching into the new week opening gap or previous week's new week opening gap, and then fell apart. Okay. And then again, I also want to point out the fact that this gap here that I pointed out earlier from the regular trading hours from Friday price, I had an anticipation that it was going to come back up into there and fill this from the start of the day. So that's the bias early on was bullish, just to get us up into there. But the overall framework was going to be bearish because I wanted to see lower prices due to the higher time frame narrative. And Monday being a manipulation day, it's reasonable to believe that price is going to rally to pull traders in on the wrong side, get to a specific area of premium, and then accelerate to the downside, logically. Okay. So I hope that makes sense. Of course, a lot of the things that I'm talking about are referencing things that has been taught already from ICT. I'm just giving my perspective and showcasing my own clarity, in terms of what I've learned and how I utilize things and how I see things in price. So I hope that helps whoever's watching. Um, and what else? And so yeah, this is a low resistance liquidity run. This is a low resistance liquidity run, and so is this one because the market maker framework has low resistance built into it because of how it delivers. Okay. And then again, like I said, the PD array matrix hierarchy, that came into effect as well, which is very important. And then this is also a variation. If some of y'all are familiar with ICT spaces and stuff, he was talking about how he was going to teach a variation of the YouTube model, meaning that there's the original one that happens, and then as price is delivering, price always a lot of times seeks buy stops and sell stops, takes those, and then presents shifts in market structure and fair value gaps continuously within the price leg that's delivering. So when price sold off here, if you would have missed this, or anyone would have missed this, you don't have to think, oh, I missed the move, because if you have an understanding of where price is headed, you can literally just look for the signatures to occur again. Run on stops, shift in market structure, fair value gap, return back to it. Boom. Couldn't even make it to the 50% of this fair value gap here. Also, there's an inversion fair value gap as well, from over on this side. Okay, so this is an inverted fair value gap, which acts as what? Acts as resistance. Okay. And yeah, so we went, rallied up, manipulated higher with what I just said, all the details and stuff. Went from this previous week's new week opening gap, went from January 15th all the way down to this new week's opening gap. Okay. So yeah, I hope that makes sense. Then also I have this fib projection here, and it also gives you two specific targets in terms of where price could potentially head. This lower area down here is more or less leaning on the fact that this is a 1 hour market maker sell model as well, with the 1 minute market maker sell model within that. So you see how that works? This is an example of what it means for price to be fractal within the same price leg. When you're talking about market maker sell models and buy models, specifically in this example, within a higher time framework of a market maker sell model, based on this example, the other little legs in between can also be market maker buy and sell models. Okay. So yeah, I hope that wasn't complicated. And I bet also if you go down to like a 15-second chart, this little retracement here, consolidation, accumulation, or accumulation of shorts, reaccumulation, and then boom, it just expands higher, creating another market maker buy model within this retracement. So yeah, I hope that makes sense, and I'm not confusing anybody. But this is how I view and see price based on what I've learned. And I feel like it just makes sense, and I hope it makes sense to you guys as well, because this entire move I saw from the start, and it's generally been the case for like the last 2 years. Let's go back and kind of just view some of the highlights of this morning. And I also saw DXY. Okay, it's a little messy. Let's get that trend line thing out of here. So yeah, this was DXY before anything happened here. It went to the midpoint of this daily wick, and then ended up retracing lower. And these are the previous 3 days lows. And there's also a fair value gap in there. And this is what we're aiming for is buy side, right? Because of the volume imbalance, we're hella close. And price literally has a trend line liquidity area here. So retail seeing that as, oh, it's a trend line. When it comes back, I'm going to have to buy. So people are buying, and it's engineered liquidity by doing that. That's the only reason why trend lines are even effective. It's not effective to make it so people, well, I mean, there's people that make money off of using trend lines and stuff. But when we're looking at the market the way we do, it's just engineering liquidity for us. It literally looks like, that's where stops are at and liquidity resides. So what did price do? Ended up running the highs, shifted market structure, YouTube model, gave another retracement into this fair value gap, which is also the open of the daily rejection block that was over here. And then it just ended up selling off. And then this is the result here. Came down specifically to, I think this is like a weekly wick midpoint. And so it just came down and basically bounced off. And then there was a potential for it to come down into here because that's this fair value gap. When you put a fib from this low to that high, the 62% or optimal trade entry level and a discount is basically in line with that as well. So that would have made sense as well. And it may still occur. It may come down there and set the low of the week before it rallies higher, pulling in more people that are looking at things in terms of like, oh, it's going to start selling, not realizing fundamentals and what's actually happening in the marketplace. Yeah, I hope that made sense. And then of course, here is the before. And if you check the time in here, that says 7:30 in the morning, February 27th. So this was all before the fact. It was executed on a live account. I didn't catch the big run because I already made money on the small one. And one of my rules specifically for myself is if I make money, at least, a 0.5% to 1% in a day, although I allow myself to take 1 to 2 trades a day, maximum 3 trades a day. If I make money on it, I stop because that's preserving capital and it's managing greed, and it's managing, or developing self-control and stuff like that. It keeps you out of the marketplace and secures your money because we're in here to make money. We're not in here to get a fun ride, okay, and get that adrenaline rush every 5 minutes. It's not how this works. If you want to be profitable, at least. But yeah, we've seen price come up in the previous new week opening gap, filled in the regular trading hours gap that was created. And then another thing about the regular trading hours situation, because there was one from Friday, and then as price was rallying up before 6:30, it actually created another gap for today. So it was like a recent regular trading hours gap right here. See how price traded up there before 6:30? Once 6:30 opened, since price was already moving above that, the regular trading hours shows that there was a gap in here as well. So when price came up here and rejected off, now price basically was basically coming up into this previous new week's opening gap to fill the regular trading hours and stop people out. to pair smart money sells with willing buyers at a higher price. This is also showing that price opened on the day at a premium, and people like, you have a product, you like to sell it high and buy it when it's low, right? So that this is like a perfect depiction of that. They're selling at a high price, and then they're coming back down to refill the rest of this. Okay. Just like they did here. They rallied higher to fill that, and then now it reversed from this previous new week opening gap to then run down into this, or the new week opening gap that's over here, which I believe that's the correct one. Okay, so I hope that made sense. I hope I wasn't, I hope I'm not confusing anybody. But as you could see, that's the result. Low resistance liquidity around here, low resistance liquidity around there. And yeah, that's the business. So if you guys have any questions, please let me know in the comment section. I'd be more than happy to try to clarify as best as I can. I've been trading ICT concepts for a great while now. And I feel like I got a pretty nice grasp of things, and I'm self-sufficient, which I proved publicly last year. And will continue to do so. But my focus this year is mainly on trying to get others, on board with things and help in any way I can, because just as ICT is giving away free information and, trying to really help everybody out, I feel like we're obligated as part of the ICT family to pull each other up. So I feel like that's just, something I'm obligated to do as well. And I hope most of you guys feel the same. Okay, because we're all a big family here in the ICT community. So I like to look at it that way. So yeah. So if there's any questions you guys have, or any confusion in terms of what I explained today, or if you have any confusion in terms of what ICT is teaching, or if you're just struggling with something and just need some advice, I'm more than happy to have a dialogue with you guys. And give any advice that I have that could potentially assist you in getting over whatever is stopping you from reaching your financial goals, right? Or just personal goals in trading. Okay. So yeah, with that being said, guys, make sure you like, follow, and subscribe. Follow me on all the social medias, on Instagram, Twitter. Those are the two mains that I'm on. We also have a private Discord if that's something you're interested in. If not, that's cool. We also have a free Telegram as well. And like I said, if you guys have any questions, feel free to let me know in the comments, and I'd be more than happy to assist you in any way that I can, or make a video surrounding your question. All right, so with that being said, you guys, I hope you have a good, safe, profitable rest of your week. And yeah, take care.
King James the Great.